Hello guys, welcome to the Trading Parrot and to another episode of the Sunday Alpha Special. This is the only video that you need to watch in preparation for a new week before the market open. If you miss all the videos from the week as well and you don't know really where you're standing, best place to catch up with the week ongoing. This video is gonna be heavily packed in alpha. We're gonna cover general markets, altcoins, Bitcoin dominance. We're gonna cover the expectations for the FOMC meeting incoming this week as well, overall picture of the cycle, and a lot more. Make sure that you are aware that in the description there are timestamps, so you can skip straight into what matters to you. Be aware that the video is probably gonna be around the 40 minutes. You can watch it at fast speed, take a break and disappear, get your beer, and be ready to hear all you need to hear. Guys, if you like this type of content, make sure that you're subscribed to the channel, hit the notification bell to get notified every time I put out one of these videos. Can we get 1,000 likes in a Sunday Alpha Special? The more likes, the more motivation I have to prepare all this information for you. And today, guys, I ask on YouTube, on Telegram, on Twitter, I ask my Patreon community as well, what are the things that we cannot miss for today's video? What are the most important things? And I'm gonna go through most of the questions, many of them, although probably there are 100 questions in there. People are wondering loads of things about this cycle. I am starting a trading competition, guys, on 2bit. This is gonna last 29 days. I have left a link at the top of the description. Join my trading competition team and we can win together up to $3 million. That's the prize pool. If you join early, we can be part also of the early bird, which is split across the team, so it could be really good cash. We can also win an iPhone, a Nintendo Switch, or a mystery prize. Have a look at the description. And yes, looking at attention into Bitcoin, we have a spike both on Bitcoin and altcoins. It was looking really promising, but as we approach the end of the month, now I see a division in my crypto Twitter timeline. Half of the people are saying, are you nuts? The altcoin season is gonna last a lot longer. And the other half are pretty much part of this depression in here. We went all the way from 55 attention on Google Trends back into 18. This is a non-settled candle. We are over a weekend. I understand it, but that is a big move to the downside. And when it comes to the news, most of the news are talking about, or at least the ones that are getting the most views. Look at that, 26,000 views, and people are looking now or starting to realize that there are a heck of a lot of Bitcoin moving from the old era, probably early miners, and all the articles are speculating the big elephant in the room is whether all of that was already absorbed, bullish absorption, and they have already sold all the 9 billion. Some headlines are implying that. Some other headlines are saying that only 10K was distributed, but the reality is that no one knows. This is just speculation that they are basing on how much has come out of the exchange, hypothetically from the same account that went into Galaxy Digital. They claim that around 1 billion came out in USDT and that must come from that account, but there is really no official information. I treat these events as fasten your belt, prepare for additional volatility. It could turn into bullish absorption. It could turn into a slightly deeper pullback. Whichever is the outcome, the worst scenario is that you assume some outcome and you bet all in on that. Definitely stay away from that way of approaching things. Look on chain Twitter has been covering this the most, in my opinion, showing how much got transferred every day and how much came out in the shape of USDT. And I insist, there was heavy amounts of Bitcoin coming into exchanges from large holders. As you can see in here, just to wrap up what happened during the week, we started Monday with over 40,000, then we have a few days with 10,000 or 11, then we have almost 44 in a single day, followed by Tuesday with 33. So in total, around 10 days of heavy inflows, and the only day that we have an outflow, that was on Wednesday, 16th of July, and that's all we have to compensate all the inflows. And thanks to that, the indicator of Big Well Explorer has entered in the area of heavy potential distribution incoming. You can see 3 different moments where we have something like that. One was a 73 with drawdowns of 20%. Then in this area in here, we have a drawdown of 25. In this area in here, we have another deposit with 30% drawdown. And we could say so far that the drawdown of 6% has been extremely mild relative to what we usually get. So my personal opinion, and there is no way I can confirm this, is that there is a huge amount of Bitcoin in the exchange that is still there with the intention of being sold, and we just don't know what's going to be the timing or what's their preferred exit price. It could be that they're waiting for 125, in which case, if that is your swing trade target, then you don't really care, because you're basically expecting to distribute at the same time. As long as you take your exit slightly before they do, you should be fine. There's also the possibility that maybe they are just gonna extract it again from the exchange. Since this is coming from a hypothetically very early miner, I will expect them to know what they're doing. So either they're selling because they expect a pullback coming from something else with some kind of insider information, if you want, or second, this is part of the miner capitulation that just ended. If you remember, from 26th of June, we've been in a capitulation from miners. The hash rate came down very sharply, and that during a time that the price was pretty much hitting all-time highs or slightly below it. That shows that the stress that they were having, the miners, will still affect them despite the fact of the price of Bitcoin being very high. Eventually, on Wednesday, we got a buy signal that completed the miners capitulation, but right after the buy signal, there were further deposits. Yes, because on Tuesday, we got 34,000 Bitcoin coming in still after already printing a buy. That means that maybe the deposits are a little bit more than just to compensate from the stress of the miner capitulation and the hash rate coming down. The hash rate went already up and they were still depositing, if you get what I mean. Some say the well movement, although eye-catching, should not overshadow the constructive momentum the crypto industry is gaining on the regulatory front. They say this means that the 80,000 Bitcoin likely has about 12,000 left, only 1 billion to be sold. I don't know how they can really conclude such a thing, and I feel like it's an optimistic feeling rather than some properly informed, data-driven decision, information, whatever. Let's go and let's see some news in here. We got the US spot Bitcoin ETF log 130.8 million net inflow, with BlackRock leading with 92. Then we have the UK-based Smarted Web company adds 225 Bitcoin. All of this bullish, even if it's just symbolic in the right direction, because this is not a big amount, right? It's just 26 million. Bitcoin mining difficulty hits new all-time high after 1.07% adjustment. It's always good to hear new things, positive things affecting the network, like the hash rate coming up or the mining difficulty going up, rewarding the miners. What I really want to hear, guys, and I say it twice this week in different videos, is the network being more active. Fees being paid to miners to compensate for all the stress that they went through during the bear market, 1, and 2, in preparation to enter a new bear market eventually, so they can really survive and the network can continue to exist. That's it. There is a theory, I don't remember the author at the moment, that says the value of a network is directly proportional to the activity in the network. And Bitcoin has survived so many times bear markets, and it was all of that thanks to the network being very active. But something tells me that lack of activity in the network, and I'm assuming it might not come this cycle, but if it does come, well, then we are fine, we are safe. But if it doesn't come, it should, in a way, affect negatively the Bitcoin network, the miners, the ecosystem as a whole. And that is despite of ETFs and all these derivative contracts new demand. Because in my opinion, that demand is all coming in thanks to what Bitcoin used to be. But if Bitcoin made a U-turn, well, what's going to happen with that demand if the miners suddenly don't care about keeping their computers switched on? And we got the FOMC meeting coming in, most likely unchanged. We can see here at the moment a 95.9% of no change and only 4.1 of ease. I believe that this was slightly higher within a month or so ago. Here are some positive outcomes and how it could affect crypto. So if they hold the rates in 3 days and we have a hawkish tone, which is the most likely scenario, talking about sticky inflation, the June CPI of 2.7%, and cautions against premature easing, then Bitcoin is likely to consolidate and modestly pull back as risk appetite cools. And that for all coins, typically more sensitive to risk of moves, so expect underperformance versus BTC. Then we got the scenario 2, which is apparently less likely, to hold the rates but at dovish tone instead. Then we get a more positive outlook for Bitcoin and altcoins outperforming Bitcoin as leverage and speculative flows return. Now, if we got a surprise 25 basis point cut, which is quite unlikely in my opinion as well, cutting to 4 to 425, then we can expect a strong rally across Bitcoin and altcoins. This is kind of the most agreed expectation, and I guess ChatGPT is extracting this from what the public opinion is expressing through social network. But there is an obscure version of this as well, which is actually the opposite. If the Fed needs to cut, whether it's because either something really big broke, then that is potentially preceding the beginning of a huge recession or a crash in general markets, in which case there is no way that really Bitcoin can rally by itself. It will fall with everything together. That is another perspective from some other opinions. And second, if the rate cut comes by forcing the hand of the Fed, call it Trump saying, hey, cut the rates now or I fire you. Or first, he fires Powell and then cuts the rate by himself, hitting the table. Well, if that's the case, that can also spread fears among serious investors because people want a separation of this power. So this is not politics commentary. This is just two alternative views around what's coming for the rate cuts. It doesn't reflect my personal opinion. I'm just basically summarizing 3 different perspectives. It's up to you, whichever you prefer. And I'm gonna scroll through the questions of different people to see what really stands out as interesting, and we can take away from all these opinions what we wanna cover in the Sunday Alpha special. After all, this is your special episode for your week. So I ask, tomorrow I'll record the Sunday Alpha special. What are the topics I shouldn't miss? Write down your bullet points below. So Bogna says possible pullbacks and long entries, Ethereum dominance and alts. I'm gonna cover that definitely. Bear market trading strategies, maybe a bit early, but good to get an idea of different ways of doing it before it starts. Stable coin market, yeah, I'm gonna cover that. Clear probabilities of what are the most chances that Bitcoin is getting into 134 versus 84. And guys, you know my opinion. I prepare for both scenarios, right? And this is the key differentiator between a trader that bets on one side, gets wrecked. You can bet on both sides, guys. You can think that 84 has a huge amount of liquidity that you can target eventually. You can build a position to hit that level, and you can also start preparing for 134, which I am doing as well because I'm holding spot. There are key invalidation areas where I need to U-turn, but more on that later. Ethereum BTC, we covered already the 80K. Well, there are the tariffs as well coming in on Thursday and Friday, although I believe that the tariffs with the Fed rate are kind of part of the same thing. As long as Powell is still independently deciding by himself about the rate cuts, I'm sure that he sees the tariffs as an element that can increase the inflation and therefore is part of the decision of Wednesday as well. Long-short ratio, BTC dominance, yes, definitely. Then we got my community on my Patreon, which of course they get spoiled every day. Maybe it's a good time to flip some BTC to Ethereum, cover anything that give hint that money is gonna flow into alts, maybe mention the potential entry times for alts, Wyckoff accumulation, whether we are in one. I'm not an expert in Wyckoff, but I can definitely do my best with my 10 other approach. The 80,000 Bitcoin seasonality, the Russell. We can look into general markets a little bit as well. Your thoughts on Michael Saylor outlook. You know, I really don't trust anymore Michael Saylor. He's a maxi on Bitcoin, which is fine, but he's not using Bitcoin in the way that is intended. I see him as now he's became a degen speculator by using leverage, betting it all on Bitcoin, but not on spot really, doing it at an unnecessary risk, not just for himself, but for the whole market. The whole ecosystem of Bitcoin could get hit really hard because of him turning into a full degen. And we do not want that to be set as an example for other companies to become part of a bubble. That is not really what Bitcoin came for. How does the distribution now compare with when you took profit at 73K? In a short answer, not close at all. At 73K, there was like 95% of the indicators saying sell, and at the moment we kind of have 50-50 at best. We got some questions as well coming in on Twitter, but it's just gonna become too overwhelming to be able to do all of this at the same time. So many charts and so many questions. We got the rate cuts. This is an interesting one about the 4-year cycle shifting by a few months every cycle, ending a little bit later. Well, at least the previous cycle, I will say it ended around November, so I'm not really sure about that. I will probably have to watch the video to fully understand. On YouTube, there are also so many questions in here. You can stop the video and have a look. We'll cover all of this definitely. If you haven't been watching this week, what happened with the Federal Reserve balance sheet, which is definitely something important to consider prior to a FOMC meeting, you can see that after they added to the balance sheet on the week before, this week they reduced slightly. And this has no implications in terms of recognizing any pattern to understand whether we are on a channel up or on a channel down. Is still not clear in my opinion. We are just literally inside this section in here, which could be a bear flag, but it could also expand further to the upside, possibly getting closer into the 4 trillion, in which case Bitcoin could continue to rally. If we significantly break towards this area, Bitcoin is also gonna have a period of consolidation. You can see in periods where the federal balance sheet was coming down, we also went sideways into 49K with Bitcoin, and same bear market in here, and the Federal Reserve consistently reducing. As soon as it starts coming back up, we started the bull market. Surprise, surprise. Aggregated open interest, guys, I continue to monitor this not just as a leading indicator of what Bitcoin could do. You can see that Bitcoin is on sideways in here, but the open interest is starting to speed up to the upside. Aggregated open interest across all exchanges can give you a view on whether speculators are still here. If they take massive profits and they close down their positions, that is typically the effect that you want to see if you are expecting sideways or an actual huge pullback. But on the 25th and 26th of July, the aggregated open interest put an all-time high. And it's not even cooling down, it's just there at the middle line. Alright, let's go into CME gap. This video is gonna end up lasting 2 hours if I continue like this. Let me know in the comments if you are enjoying the episode. I really want to hear that. These days I get a fair amount of people saying that is just too much, it's overwhelming, it's overcomplicated. It's fine. So we built a CME gap on Friday. We left this gap in there at 119,950 on CME Premium, but 118,661 on Binance. And as soon as we got into the CME gap that actually matters, which is number 2, this one is at almost 2K CME gap, we took, we could say 1/4 on 1/3 of it, and we started building a bottoming formation. Remember that over the week we talked about a double top, and we took at a technical target of 110, but I say, and I insisted in 2 videos in a row, that we are in the area where we can produce a liquidity hunt, right? And this is the definition of a liquidity hunt. You put a new low, you grab some liquidity, you hint that you're going lower, and you trap just so many shorts. And we did trap many shorts. I show you in videos on Thursday and Friday that they were going at an average of over 15x short from the bottom. And I told you, do not be that Joe that does that at that point, because you are at a high risk that you are within a liquidity hand. And congratulations, that turned, thanks to all those shorts, into a liquidity hand. It became just too attractive to go, to hit them hard where they are leaving their liquidity pools, to hit the CME gap to the top, and to also go and hit the fair value gaps that were left in this area in here. You can see that over the weekend, that's precisely what we have done. We went into this fair value gap and we consume it. Now we have left a few below the price, and we continue to form this falling wedge, which is a bullish structure now. What we need to monitor is what could happen if we go and we take the CME gap. We have left around 118,600. Let me be a bit more accurate in here, and I'm gonna leave right there. That is our CME gap from Friday. So by market open, think about this. Try to chew gum and walk at the same time. If you can do that, you can understand this point. On one side, we have this CME gap form right there. We can go grab it, stretching our hand, and still potentially remain within the falling wedge. That is one scenario. The scenario of the fake breakout to upside. We just take that, we come back inside, and we start going into the fair value gaps that we left below, and potentially even hitting a new lower low at 114.7. That's just one scenario. Remember that we are moving up over a weekend, so we need to go back into this chart. We close at 116.6. It's always one candle before. We close here, right there, and price has been moving into 118, so it went all the way up right there. So it could potentially on Monday grab this gap and then take care of the gap that is building below it. Go and hit that 116. At that point, it can decide whether it's gonna really go for the new all-time high from here, or if it wants to mess around with another test of the falling wedge. Well, it will be interesting then to see if at 1, 2, 3 a.m. we go and we close this gap and we are back below here with a strong rejection, like leaving a long wick intra-candle 4-hour being sold off, leaving a shooting start around here that could bring some reassurance that maybe we're gonna hit 114 again. Another reason to think about 114 is because now that is the largest pool. 114.220 is the largest pool across all the range. We do have 117 that could be a compromise, and we have all this wide bucket in here around the 120, which is not very high with a single line, but aggregating all this liquidity is pretty substantial. I'm sure that all of this is more than the 117. You can confirm that with the cumulative, right? That green line increases to 7 billion in here, whereas in here is just 2.3. So don't underestimate those shorter candles, because together they are stronger. So CME, we got those gaps, the 118. We are gonna build something from where we are into 116 unless we crash on Sunday, which is not something that we have done very frequently. We are starting to lean into getting Sunday pumps right before we start Monday. I called that on the previous Sunday Alpha, and that's precisely what happened on that Sunday. We started Monday with a pump. And we have this one in here. Of course, we have plenty more gaps. You can follow them if you look into the right hand side. In here, we have 97, 92, 54, 21, 20. Let's look at the Bitcoin status. We have done a breakdown and now we have done a reclaim on the 4 hour. 4 hour continues to be all messed up. Very difficult to trade the 4 hour purely based on RSI at this moment. We're going to look at the CPR. I haven't done it yet. And on the daily, we confirm the revenge rally. We're going to look into those 3 scenarios, 1, 2, and 3 that we talk about the whole week. Scenario number 1, my preferred one, ended up playing out. I'll give you an update on that next. Let's look at the 4 hour. You can see all pinching and pinching support. Nothing is really sustainable support. You can continue moving the line. And after the breakout and those initial higher highs, higher lows, the structure became just like a puke to the downside. We are now having lower highs and lower lows in this area of the breakout. So we really cannot trust that much the 4 hour. Just like I said around Wednesday when I gave up looking at the 4 hour and we ended up saying, guys, let's move to the daily, 4 hour, let's scrap it. And now you can see that we have done a big move down on the 4 hour. And here we pinched the past week low. We created loads of volume, indeed the largest candles of volume across all the range that you can see in the screen with a long red candle. And now what we are doing is we are trying to reclaim. So we are coming from the lower end into the middle of the range. And we got now these lines that we had from before that are so far acting as resistance. But we are on a Sunday. Don't take too serious what's going on the 4 hour because Sunday is low volume and anyone can make anything look the way they want you to see. So let's move on from 4 hour. Let's leave it like this. It's still looking very noisy. During the whole week, I talk about the formation of this double top and I put a target at 110. And we always talk about the technical target in one hand and we always talk about the fake out on the other hand because we are well informed data-driven traders. And as soon as we pinch this level in here at 114.7 and we were trading at those levels, we never said that the breakout is confirmed because it needs to close the daily there. And the daily didn't close there. We ended up seeing that the liquidity hunt ended up playing out. When you regain a trading range, you're calling to go into the top of the range. The top of the range at the moment is 119, actually 120, and we got somewhere there a CME gap as well, attracting that move to the upside. We could start Monday and reach those levels. We are back above the CPR level of 117.5. It's been just all over the place, pretty much all month trading against that level of resistance in the CPR model, and we are a few days before starting a new month, August. And it's either August or July, the month where we should be expecting some red. After all, August has a minus 8% median. July tends to be good, but it's either July or August or September. One of those months usually has the last shakeout before really taking things seriously in October, November. And I'm talking about a topping year specifically. So if July is not gonna be, possibly we're gonna get it in August. Notice that we were calling for a July with a squeeze. That's what we say. We say that the CPRs are gonna be very constrained. We nailed the position of the July placement of the pivots. And since we have moved up this month and we are about to end the month at these prices, if we end up doing so, we're going to get the pivots somewhere in here at around 114, 113. And that is going to continue the trend of pivots coming up. Right. This week, the daily was the spotlight. The daily was spot on analysis. The 4 hour, not so much, I will say. We started the week with a breakdown. We tracked each day that we went below the orange line and we speculated that we were going to get a scenario 1 hitting the orange line as resistance thanks to a revenge rally. We say scenario 2 is to reclaim the orange line and to go straight into 85. That could turn into the 5th wave in the whole bull market on the daily time frame to hit these diminishing levels of momentum. But we didn't end up doing 2. We ended up doing the most likely scenario according to this analysis, which was 1, to put a pivot in here at 68 and then go for lower lows. That's what we did. At some point we were around 50 intra-candle. That is thanks to this long wick to the downside, hitting the liquidity of the past week low, and now we are still at lows, not being able yet to put a new high on the daily. We got coming in a resistance at 63.52, and we still have on the table now this level that is located at 43.44. 25 and 84.65 are still the two extremes on the daily. So I will say we need to focus on whether can we hit 63.52 as a resistance and clear out the excessive shorts that we convinced to enter in degen positions on Thursday and Friday. Can we take the CME gap that we formed on Friday as well by doing so, clearing all the fair value gaps, then see a rejection of 63 and then a move into 43? It is possible, okay? We need to look for that potential outcome. If you're convinced that that is what's about to happen in the next week, thanks to maybe some low expectation on the Fed rate cuts not coming, or maybe the tariffs and all of that, the way to trade that is basically, well, get your trousers on, or your skirt if you're a girl and you're better trading than the rest of the people watching this video, and wait until you hit resistance or slightly higher intra-candle and start your short. Of course, you need to look up for where you're going to place your risk, your stop loss, and all of that. But you don't start the short from the lows of the momentum. You wait until you hit resistance, and then if you're wrong, you hit stop loss. But you hit stop loss at some point where it's lower likely to hit if you are going to be right? For example, not going beyond 68 on the RSI. If you are already above 68, you already put a bullish structure on a candle close or something like that, then you're out. If you want to trade along from here, you're already at RSIs of 59, so you could start building from here or from a slightly lower level along with the expectation that you are going to break this white line and you are going to head into 85. So that could be one order when the RSI hits a level like this, and maybe if you're wrong on the first one, another order from here. Eventually, if you are right, you go in that direction. Of course, you also have to have an invalidation point or levels where you want to DCA. It depends on what is your risk aversion and the way you manage your own risk. So let's answer that question. Can we do all business and just hit 63.52? 63.52 is currently located at 119 1-to-1. So that consumes all fair value gaps, which we have already done on 4-hour and daily, and that consumes the CME gap. At that point, it's pretty much a finger in the air. Is it gonna see a rejection there? I don't know. We do have motivation to go up and to go down from there, so you have to pick a side and manage your risk. That's the ugly truth of being a trader. If you're right from that point, we could go into 114 and you get a move of 5k to the downside. That could be a nice swing. If you're wrong, ideally you go beyond 120 and you put a close beyond that, you're done. That is the signal that the continuation of this now bull flag into 130, it's much more likely, and you don't want to be riding along with high leverage all the way into that direction. Sorry, a short with high leverage. Notice as well how the RSI support, that RSI of around 42 that I had in the previous chart, in here now is 43, 44, and the 25 are all creeping up, right? The green one is at 113 pretty much nowadays. The anchor VWAP is at 110. The top of the range on the daily that we broke up from is at 108. That red line, the let's go to hell, has just climbed above 100k together with the anchor VWAP coming from the bottom of the move. Now slightly above the point of control as well. And last week we put a bearish divergence on the market cipher, and the price is not being able to go beyond this green candle at the moment. So that is favoring the implication of the wick to the upside together with the bearish divergence for further potential downside. That is what that look is saying. And if we continue like this and by Sunday we don't have that rally in the last minute, we could settle this bearish cross on the stochastic RSI. That is just another data point. Of course, we cannot just trust a single signal. Very interesting to see the SOPR of Ethereum versus Bitcoin, because on Bitcoin we are getting closer to territory of too many people selling at a loss. And I think that is a consequence of what happened during this week to the downside, because it was, if you pay attention here, it was deeper than the previous week low, and that kind of freaked out a lot of Bitcoin traders. That's why we see the SOPR in the area of realizing losses that rather than closing at profits. We have the other extreme on Ethereum in this end. We can see that people continue to take profits in the green. They're closing positions in the green, and that is thanks to this bull flag being very shallow relative to all the move up that we have had. So in that sense, the SOPR of Ethereum is getting closer to an area that could be calling for a local top. We could extend into the 1618, okay, so just to get you some ranges in there and keep the SOPR still pushing up. After all, that is how it behaved in the past in March 2024. We hit the band of the percentile, which calls for a very early signal in here at around 3.3, but the price ended up going into 4.2, printing 3 more signals of excessive profit taking, and that was the top so far this cycle. So we keep an eye on this zigzag move in here in case we were to have something similar on Ethereum. At that point, we hit the golden pocket Fibonacci at 4.1, and we came back from there with a drawdown of 70% within the bull market. Now, if we hit the golden pocket, that is 4.6. At that point, we have liquidity, not just of the last time we went up, but from this time and from this time, because not a single of those 3 times we managed to go beyond 4.2. Therefore, from 4.2 into possibly 5K, there is a huge cloud of liquidity pools that even if Ethereum managed only to get there, I will say it needs to do at least something like this. Worst case scenario, people are waiting for 10K, 6K and all of that. I really want to see that we survive taking the liquidity and carrying on. And I don't need to bet. I just look at the price action while we are there, protecting my position in case we go sub 4K again. And on the monthly Bitcoin, going back to Bitcoin, is potentially about to print an RSI above 70, and historically speaking, that is extremely important. If you are an investor on Bitcoin and you're not monitoring in history how many times and for how long we spend it above 70, you're really missing out, guys. Look at this. We spent 11 bars, 337 days in 2018, 2017, right? Above 70. The next cycle, we spend it 180. So we go from 340 to 180, and I did a linear regression of how is diminishing the times that we spend above 70. And I got 90 days for this cycle, and we have already done that, okay? So if we just trust the linear regression in a single RSI, which is not my case, we are done. We are done with that. Now, we are not done in another, if we look at this from another angle. We haven't hit the trend line. We haven't had a huge amount of RSI above 70, because literally this was 71, the next one was 72, and in the middle we were below it with a 69.89. So what's that? That's crap. Let's say we get it now. Let's say you are an extremely bullish person and you're waiting for your moment of glory for Bitcoin in this cycle. You are not satisfied and you are waiting for that. Therefore, you can get a move into 77.49. And what could be even better is to hold that level with a few zigzags, right? So you get next month a move into 77. Then in October or in September, you come down into 73. And then in November, you go back into 77. And I'm gonna make it easy for you to visualize if that could play out. So the first move into 77 from where we are pushes the price of Bitcoin straight into 138K. Is that the top? Well, if we follow the script I just gave you, that means at 138 you come down 1 month, let's say September, which is typically bearish, and then you move down into 120. By moving down to 120 and still being above 70, if we do another kick, peak into 77 RSI or into 75, that's gonna push the yellow line way higher. And that's how you can get into 150. So the question is it doable or not? I think so, because here we went just 2 times above 70 and it's insignificant. If we really want to heal that colors in green in there, and we want the Bollinger Band width, which refers to volatility, to hit my model at 3, I don't think that's going to happen this cycle, but if we want to get some of that and that 77, well, Bitcoin needs to get into at least somewhere in between 130 and 150. And I'm already recording 1 hour and I haven't covered even half of what I need to cover. If you are still here, I really appreciate it. Let me know in the comments how long did you manage to get into the video and at what point it was too much. For me, it's never too much. I could talk about Bitcoin for a full week. Now, funding rates are getting overheated. We are at 71.8. The previous times that we peak at 93, and then with this move in here at 90. So we could get into 80, I will say. We have a little bit of headroom to go higher from here into the end of the year. Funding rate reflects what side we are, right? So if it's very positive or very negative, it reflects whether we have too many longs or too many shorts, respectively. And at the moment, we are having quite a lot of longs coming in here. We just spend a lot of time liquidating shorts, and this could flip conveniently for maybe an August or a September in the red for the longs, basically in this indicator entering into the green, liquidating more longs than shorts for a period. After all, this move down is being the lowest level of the oscillator, hitting 26%, which is way more than the 24 that we liquidated in the beginning of the bull market. And this week we had 3 consecutive days of outflows from ETFs spot on Bitcoin, but what we have on Thursday and Friday completely shadow the negativity of these 3 days in a row. You can see it in here. Probably we are already sitting at all-time highs of cumulative flows. On Ethereum, we haven't taken a single bullet in here. Every day is in the positive consistently, and that is just crazy. We are sitting at 73 in the grid. We've been fluctuating between 70 and 74, never entering really extreme grid yet, which is crazy because we are right underneath all-time highs, and not seeing extreme grid is a data point of bullishness. We are about to close on Cerberus. Another week very overextended. After 2 weeks, we print a warning sell and a golden sell before again. And I always compare with this 2021 where we did something similar and we spent 1, 2, 3 weeks in here that we were after the golden sell, after the warning sell, before entering bear market. And I'm not saying that from here we need to enter bear market. You know, guys, that I'm expecting a little bit more upside before entering a bear market, but I'm just comparing it to give you some time ranges of, you know, you get the signal and how long you wait until you get the pullback after the signal coming from this indicator that I love. Looking at liquidity pools, now we're going to look into the order book and see how we are confronting the week. And if we look very close to the liquidity, again, I insist that we have more at this end, but we have done a great job at taking the early liquidity at 115. Still 114 is untouched. There is a lot more red than going all the way up into 122. That's not the only data point. That doesn't mean that we cannot go into 122, but just from the point of view of liquidity pools, I will say that 3.5k gives you a lot more than going 3.5k to the upside. Let's see who is trading in here. We got the 50 and the 100 X's located at 121. We don't have many big leverage below the price. Now, if we zoom out a little bit and we start bringing other levels of liquidity, including the 10x, we get 2 buckets above the price and 2 below the price. And this one, guys, is extremely huge, the 107k. That is this one corresponding with the liquidation map, but this one tracks only 30 days. And that's why on the last 30 days, 114 seems to be the largest one. But since trading different tracks more than just 30 days, we see that 107 is bigger than 114. Now, if we look at long term, of course, we've been monitoring 1, 2, and 3. That number 2 is definitely the big boss of the liquidity pools so far. We spent the week liquidating longs, and we are starting to see that oscillator of liquidations is starting to shift back up. The question is if we are going to enter an actual season of liquidating longs for a little bit longer, or if we are going to flip back into liquidating shorts. In my opinion, we tend to stay liquidating a group for a little bit longer than just one hit, but we'll see. This is how the order book is looking over the weekend. Of course, do not use this as information for trading on Monday, because as soon as we enter Monday, or even in the last hours of Sunday, this massively flips. So far, it's looking like there is a substantial resistance with 66 and 47 million above the price. And of course, the purple whales took advantage of the move up, and they closed their positions as soon as we started the weekend. And that was the 25th. They closed that long, and they now are completely done with the week. Brown whales are pointing up over the weekend, but not in a substantial way. Remember that purple whales are the ones that are trading 100k to 1 million, less than the largest ones, the brown ones, but in aggregated perspective, they have more volume to move. There's a lot more volume coming from the purple whales, and that's why they tend to affect more the direction of the price. We can see how it looks the order book on Market Monkey Terminal. We continue to have a preference to hold the price. We have 2.55 on Binance versus 2K at 120. If we zoom in, we can see that level. Now, all those levels that we've been seeing for 1 or 2 weeks, holding the 115, that came from 114 and started coming back up and up, got hit with this move down. And it filled some of the orders, and they actively wanted to trade that level, and they form a double bottom. And I will say that now that level around here is no longer there. I will say it has shifted up into 117,600. So I'm very interested to see if this turns into a double top on the 1 hour, if they're gonna hold that 117 with the intention of babysitting the price all the way up into the CME gap as soon as the market opens instead. Despite the fact that the price has recovered into the median, we could say at 118, or the point of control if you want, I haven't seen the CBD doing any shift. So you can still see that as price remains at the same level, aggressive buyers are stepping back little by little, leaving the space for aggressive sellers. If that continues consistently in that direction, even though the price goes up, the CBD continues to favor aggressive sellers, that could eventually put a new lower low in the price. As I mentioned, looking at the order book is just interesting over the weekend, but is not very meaningful. We have very little amount of support relative to the past, right? So we are at percentiles at 33, 33, 69, and 53. Those are located at 10, 1, 2, and 5%, the different buckets. But since there is little volume, you can argue, okay, now there is more resistance than support at some deviations of the price, like, for example, at 5% or at 2% away from the price. Fair enough. But there is so little in the order book playing there, these moves, that is not that significant, and it can lead to manipulation. Weekend manipulation, very typical. And yes, these shorts with very high levels of leverage that we identify on the 25th are probably now underwater or already liquidated. This is a move of over 27%, almost 3%. Multiply that by an average leverage of 15x. That gives you 45% down in average. But there are in that average many of them over 15x, of course, 25x's, 30x's that are pretty much liquidated by now. And if the price goes slightly higher, they're out. I am still in my short, but there is no way I can get liquidated. I am holding way more spot Bitcoin, and my plan is to build up on that short position. So I'm just pretty much executing my plan and laying back. You can see how our signal in here that calls for a move up coming from the CBD being very low in the anchor one applied to whales versus the retail being very high in there. The combination of those two give a stronger buy signal on that dip. Liquidation levels as well signal buy right there at that dip as well, and that was favoring the scenario of the liquidity hand. You can see overall how the altcoins have increased increase in number of longs. This is true retail long accounts, and it has come from, we could say, April, from the lows of an average of 42% across all the coins in average. We increased the amount of longs into June, and we made a peak of 78% of all retail was long around the 21st of July, and that has cooled down now to just 70% of them, which is right there at the previous resistance that we had earlier this year. So we could do TA of this, and we could say if this holds there, we could be due for a new swing high of retails being long. General markets had a really great week, guys, and that's definitely contributing to Bitcoin holding around the levels, even though there is some distribution coming in from old miners. You can see in here the S&P put an all-time high, Nasdaq as well. The VIX has come down, broke down, and is about to confirm the breakdown into the area of safety as opposed to the expansion that could cause a collapse in the market. So these lows, if they get too low as well, right? If we start shooting back too low, eventually you get pretty much guaranteed the expansion. And gold is closing right there at resistance. So we don't have a confirmation of a breakout weekly on the gold. So far, we saw another week pushing it back below. So that's important. This is how it closed the general markets on Friday. I wonder if the play in here is to trade what's about to come with the FOMC. I'm sure it's part of that. I wonder how important is the FOMC coming in next week, and the fears about whatever change can come in from the tariffs later in the week as well. But you can see general markets were very happy. Going into the altcoins, after hitting 59, that was the maximum, and there's tons of videos in crypto talking about whether that was it, that was the altcoin season. Well, technically the index is in altcoin season once you get into 75. Of course, the allocation of assets must happen within a Bitcoin season, which is where you buy cheap, then you sell expensive in here. So the question is, are altcoins gonna manage to really outpace Bitcoin big enough, right? If we get some contenders on the lower spectrum in here to outpace Bitcoin too, are they gonna manage to do so? Look at Solana right underneath Bitcoin and ADA as well, in which case we could see that the index manages finally to get there. Now, it's not just about getting there, it's about staying there, and for how long, being just 1 week, 2 days, or just 1 day in here. That's all we have had in this cycle, as opposed to 3 months of craziness and multiple instances, right? You got in here May 2021, you got there August. This was a lot more time spent enjoying that season. So let's have a look at some important indicators. Let's start with others against BTC. You can see that we are closing the week right at resistance. So we don't have an others versus Bitcoin breakout weekly at the moment, which is a little bit frustrating, but we are closing right there at the resistance. So if you know what I mean, that could mean that next week we could settle the breakout, or next week, if we are not lucky, we could put ideally a higher low in here at 37 on this ratio. Now, others have done a big move so far into the revenge rally, hitting the 64. Remember, we are calling to get into $337 billion for others, and we managed to get into 320. So there's 17 billion still of upside to hit that as a resistance. And if we look at USD dominance against total free dominance, extremely important because we have some targets set around 19% and some targets around 16%. That is if we hit the support in there, or if we hit the technical target of the double top. Why am I analyzing this? Because every cycle has a channel. The channel in 2021 was this one. Once you exit from the top, you enter a bear market. And thanks to this rejection of the top, we are enjoying now some sort of mediocre so far altcoin season. The breakdown is confirmed last week. And what we have done this week is basically come back to the neckline and retest. So if we hold there and if we don't don't reclaim that 23%, I will say we still have a chance to land on the first target of 20% and then the 15 or 16%. If we do the 16%, we should have a lot more upside for altcoins. Now, if we look at this chart with the fractal from 2021, we are here in the red area, right? This red area in here was the beginning of the bear market. But I have decided to not look anymore at this chart and to use, instead of USDT dominance, USDT plus USDC. Unfortunately, TradingView spoiled my chart because they removed the support for stablecoin dominance as a whole. So I'm going to have to redo that chart. But this one in here, just for historical reason, is already in the area of exit everything, right? When you were here in November 2021, the dominance did nothing but increasing from 2% into 9%, and that is the largest move down of the altcoins in the past cycle. Yeah, in around April, there was some upside because USDT dominance went from 5 to 3 point something, but that was a dead cat bounce. So let's see if we continue to follow this fractal, but let's pay attention to the upgraded version of the chart. And yeah, I'm gonna have to change this from stable coins dominance, something like this. And yeah, I got my support there, and we are still far from the support. So the support is at 544% and we are at 595. There is a gap there to be filled, but be careful. Don't take this as financial advice that we need to get into 544, because if you observe in here, even though that is the all-time support, that doesn't mean that we start a bear market right from the green line. In here, we started from 372 with a huge gap against 282. So we're getting closer, and all I know is that we have never broken that support, but you could also argue that this has already broken out to the upside and that we are in a channel up expanding, and anything that increases in here, which is dollars, means that there is less flow into altcoins, so watch out. You could also argue that support has been broken in here on the momentum, and therefore there should be some downside in here. That downside is upside for altcoins. Bitcoin dominance. Well, we settled the week below it, and this week that we were supposed to reclaim if we were to have a huge move up of Bitcoin dominance, that never happened. That resistance of 47.11 has kept us all week below it, which is good signs for continuation of altcoin season. Altcoin season needs dominance to carry on lower. And if you broke down and you didn't reclaim on the first week, well, next week we can still reclaim. Sure, but the longer we stay below the lost support, the more we settle the move for continuation down. We do not want to reclaim and end up doing another move into the top of the range at 70.35, because that's gonna put the dominance into over 70%. If we do that, disaster for altcoins as well. And now I hear a lot of guys saying, well, it didn't even feel like altcoin season. When we were here in November 2021, guys, or when we were here at these lows in February, March, April 2021, it was the best altcoin season. And the dominance of the dollar has been already here and has been already there. So what's wrong? Well, we have a lot of altcoins and cash is going into Bitcoin. So we are having it below the support, but the periods, the seasonality of these boxes are already happening, all right? And they are happening with huge drawdowns relative to the previous cycle. The previous cycle, we have drawdowns that were way more bearable. We spent 0 to 5% drawdown 61% of the time. Now only 21, which is 1/3 of that. And what happened with the rest? Well, we have drawdowns of 50 to 55, 45 to 50 constantly. In the previous cycle, we didn't have that, at least not on others as a whole. So I'm gonna do a wrap up on Bitcoin, but first I wanna tell you that I have an exclusive campaign with Bluffin. If you open an account on that exchange, which is a non-KYC one, you can claim bonuses for any deposits or any trading volume. I had this campaign running. I actually have a new campaign, but the link is the same and is in the description. You can trade altcoins and Bitcoin with leverage from pretty much anywhere in the world. If you have any issues with this account, you can go into 2bit as well, and by using my link, they're gonna welcome you with $50 for free to trade even before you do your deposit. Now, if you do your deposit, you can claim up to 30,000 rewards on 2bit. Both of these exchanges can offer KYC or non-KYC options. It's up to you whether you want to do it or not. The wrap up. We are in a very tricky situation, guys. It doesn't bother me because I'm not betting on a single side. I have my own plan. But if you really want to know, based on what we are seeing here with a certainty of over 99%, whether we're gonna go up or down, there is no such a thing. After all, we reclaim from a liquidity hunt. Liquidity hunt tends to send the price to the other end. Why? Because they hunted that liquidity and they want to squeeze out of their positions the shorts that enter in there. And they can only achieve that by pushing the price to the top end. So there is a good chance that we're going to go into the top end first to close the gap, to close the fair value gaps, to squeeze out all of these degens with high leverage that we saw at an average of 15x. Now, can that guarantee that then we have to have an all-time high? No, we could range a little bit. We could get to put a lower high or a higher close at around 120 and then start the week a little bit with a disappointed kind of price action because we come back into the lows. We have big liquidity in the shorter term located right below 114 and 107, which could favor further downside into August and September. So that is in a different time span relative to what I'm saying that could be in the shorter term with the due diligence aspects. After all, do not chase the up or down setups. That really doesn't help you as a trader. And the wrap up is in no way a way to tell you, well, this has the highest probability. Just go all in on that way. Give preference to think about the risk management and how you can position yourself to take care of one side in one way and the other side in another way. If you do that homework, I promise you are going to enjoy a lot more trading. And even watching this sort of videos that get a lot of people frustrated because all they want is to know up or down. And they're not going to find it here, neither anywhere else. It doesn't exist. Thanks so much for watching, and I'll see you next week. Remember to subscribe, hit the like, and write down a comment down below. I really appreciate that. Bye-bye. Take care.